Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Presently, the Australian dollar remains supported by a weaker US dollar and an RBA that remains hawkish, with the soft US dollar as well, which has revived expectations of a December Fed cut and also a potential hold on rates with the RBA or even talk of a hike. Nevertheless, either way, the price has shown strong momentum over the past 2 weeks, and with the ADX and also the RSI is now getting closer to its objective of 66 cents. Be on your guard though, as previously where I've outlined supply has returned, and no doubt we could see profit taking again, as all we can see here are bullish candles and no negative, so profit taking isn't too far away. Meanwhile, the US dollar remains under pressure for rising easing bets, while lingering concerns over China's slowdown limited the Aussies rally presently, but I feel that US data for direction, including the Fed's preferred inflation gauge, the core PCE, this week could give us further direction. Overall, though, one more step or two to the upside, and then let's see if profit taking returns. Moving on to the euro, we see the market somewhat bullish as it now heads closer to its objective around 117. There is likely to be profit taken above there, but monetary divergence remaining though. The key driver, the ECB, is widely expected to keep rates unchanged on December the 18th, while the US markets will remain firmly positioned for a 25 basis point cut next week. This drop back keeps the broader bias for euro tilted to the upward movement, that is, as I indicated here, with the ADX and also the RSI and MACD married to the bull case, and with any pullback likely to be limited. Moving on to dollar yen, well, the market was a little bit mixed when it comes to the price action on Tuesday, but overall, the Bank of Japan's governor hawkish remarks triggered fears of a yen carry unwind. Yen weakness returned as risk sentiment improved, but the move looks fragile, with markets still pricing a possible 20 basis point Bank of Japan hike on December the 19th. On the US side, as I say, the dollar has remained pressure after a softer ISM manufacturing data, and with key labour reports arriving only after the December 10th Fed meeting, noting this week is likely to shift expectations for a rate cut. So still keep on your guard with the data that's coming out, but overall technicals have weakened for dollar yen, so my call is still bearish and down towards 154 area, and let's see if it can improve in terms of the technical pattern and the weaker bias. Sterling still a little bit mixed as it trades around the area of 132. Nevertheless, I still call the upside of 133 as a potential target, but could see profit taking there, and we do need to see a break for any further bullish call. Looking to the pullback, well, the support is close towards that bottom side around 131.5. Even saw a little bit of profit taking when it comes back into gold. Nevertheless, my upside call still remains somewhere around 4,244 to 50 on the broader call. And with any weakness, well, I do expect to see bullishness come back towards this trend line, which is a long way, around 4,110.20, with the immediate support seen around 4,119.96. Wrapping up with oil, it slammed into that resistant line around 59.5 and pull back. But nevertheless, let's see if demand can come back and break through it and then open the way on to $62 a barrel reassess. Well, that's a wrap. Thank you for joining me. As always, look at the intraday report. I hope you enjoyed a great start to the day.